Okay, let's look at Link. It's one of those ones that are doing well of lately because it's done a few things. Just to recap, we've got this wave 5 to the upside. As you can see, wave 5, 2, 3, 4, 5. We have this correction wave, ABC, which is factored with 1, 2, 3, 4. So this is a long accumulation period, and ever so slightly we thought this was a 3 or 4, so that was a 3, that was a 4, and then we had this horizontal support. This little last bit, I believe, makes wave 5, and now we're having a correction, or the initial stage 1, wave 1, wave 2 potentially, wave 3, 4, and so on. So we're expecting for eventually a breakout of this accumulation. It's slightly a broadening wedge if you look at that. So it's got a lot of merit, and finding the entry is pretty important. If you bought the bottom, fantastic. We've also, if you noticed, all along the uptrend, we had these moving averages pretty much playing support up to the point that they'll cross over, and then it's his first shot saying that we are going to go down. We're looking at the weekly, by the way, so that does tell you that we're going to go down after that. And therefore, it really, over here, that was our neckline, Wyckoff distribution. We also have a base here as well, which is a bit confusing at the time. So I thought that might be the base, wave 3 to 4, then wave 5. So the base, we have a neckline that's more important. That is a more important one. So I do believe we will hit that, and if we could break above it, even better. Here's a golden ratio 618. So we might just have to look at this as the more important level. Anyway, let's have a look at it up close. So what we have right now, what I think is on a small time frame, a wave 5. And let's look at it on the daily. So that was our flat level, ever so. And now all these boxes that you see is pretty much liquidity spots. And here's the moving averages that haven't changed. And we did break above it and then break below. But when you look from a Wyckoff perspective, you can say that this first one was a buying climax. Selling climax. The first attempt to break out, and then we get the pullback, secondary test level. So it's a double bottom or W, and it really didn't go far. And then this is likely to be the spring. I can't see this coming back down at all. So from a Wyckoff perspective, it's making a lot of sense, broadening wedge and so on. Now here we had I did call this out from our group, and it was a nice cradle setup. Give me a sec and I'll add the 10 and 20 moving average on the daily. So that was our daily entry, and if we look at it from a Fibonacci level, we pulled it back and almost the 618. If we ignore the wicks, then it's a 618, and in the 10 and 20 moving average. And if we were to add our MACD, it's still an uptrend. So we haven't broken, so it's convergent. There is no bearish divergence in there. So on the daily, that was a good entry. However, once I've said that, I don't think this is just going to go up. From my thinking, and I'll go to a small time frame just to show the clarity on it. And let's just get rid of these. If that's our 1, 2, 3, 4, 5 assumption, we have liquidity just above it, and making that assumption, that is wave 5. I do believe that we have a bit of a correction. We might just get above this because there's a bit of liquidity, we might get a B there, and then we come back down a bit more. And now if it comes to this level here, it's perfect, because what we have here is all the moving averages converging to that level. So all the moving averages are converging to that level. If we look at our Fibonacci from the bottom to our top, it's not right in the 0.382 or the 0.5 is going to be more likely in there. Here we have previous resistance and support, so this level, just by eyeing it, is a strong support level. I don't think it's going to reach it that low. I think this is more of a good setup where it was right there. But if we were to go long, it really comes down to a few things. We can do that. I think that level of support is also convergent or confluence. So we have support there as well. So I'll be looking for the C wave to come a bit further down. If it goes below that, it starts to be a bit bearish to touch that, because it's gone beyond. Liquidity is now set to this spot here. So we've got liquidity underneath of the longs. The other liquidity is right below it, and I don't think they're going to be looking for that. And then we've got liquidity above it. So, and we have slightly over here as well. So it might just go spike above it, and if we see a pullback with a pin bar, like a good rejection, then it's likely to continue down. And in my thinking, it's probably another. So this is on a bigger time frame. If this is our 1, 2, this could be our 3, and this could be our 4, and then we hit our 5 on a bigger time frame. And so this level could be a range. If it goes below it, so be it. But I think it can go slightly below this level, and then we can get some liquidity and then back up again. So I do feel like this is going to be a range, some volatility, nice area to trade. If you miss that entry, there we go. That's already a certain percentage up. It's already gone up 9%, 10%. So I do feel like this is a range, and it's going to take some a continuation pattern of some sort. First thing is what I'm thinking, it could be a wedge of some sort. It could be inverted head and shoulders. It's going to take formation. There's no rush to jump in, and just try to look for setups with swing failure patterns. So for swing failure patterns, we want to look on a smaller time frame. But I do feel like this is a range that we can potentially make the most of it in the short term. And if it dips below this, so we saw that support. If C, we can have a double bottom C, a continuation, or slightly below this because of the liquidity. So I'm interested in that area to continue on. So if I was to move this up, I think that will be the risk. And in terms of, that's where we're going to go. So if we were to assume that was a 3 and 4 wave, say it comes down to there and there, wave 5 is probably going to hit about $9.50. Why am I thinking wave $9.50 and so on? There's liquidity there as well. So if we look at this chart, you can see the previous top, that strong resistance, right? So we have strong resistance here, strong resistance to liquidity spots. So this is going to be likely to, on the bigger time frame, like I said, 3, 4, and then 5 is here. Now you can see these lines coming down. So let's look on a bigger time frame. And that's where we've got the trend line. So it might just overperform. Once it breaks that level, once you break this level, then it's likely to find some volatility, which is perfectly acceptable with a Wyckoff accumulation. There's a shakeout phase. We're going to have a shakeout phase here. If it goes below again, that's going to be very bearish. Then I'll be looking for further lows, probably there or further more. Then the true real wave 5 could be that, but I don't think that's going to happen. I think this is going to continue on. And how high could that go? If we were to assume that this is a 0.618 level, that will be our targets. So let's have a look at that as targets. So our first target could be there, $13 roughly, and then we got this Fibonacci and this area as the next level of interest, $16, $17, and then we might just pull back. Let's have a look at that. A 618 definitely is the last bit, which is aligned with just slightly above the 414. That's a strong level, but it might just get above that, and this is where our golden ratio extension is, the 618, 1.618. So if we were to just make that a bit bolder, actually might make that black, you will see that these are the levels that we're looking at. 786 is also there, so there's a few of them, few hard levels to get past, but this is definitely a strong level. So that's one. I also feel like this could be another strong resistance, and then so on. So there's a few Fibonacci levels. We just got to see how it behaves. Where is the liquidity? Liquidity is up above here. So if it gets here, we're going to have a strong resistance because there was shorts that came in. We might just take those out. We're looking for those kind of moves. And the last bit here, there is not much. It's really above there, so we might not get that far, but if it does, I'll see that coming down like that, actually, just ever so slightly. That's if we have a nice run, and then I do expect it to come back down for correction. So that will be that on a bigger time frame. That's a 1, 2, 3, 4, potentially 5, and then A, B, C, and then the next phase of the bull run will kick in. I don't think we're just going to go straight up. So the entry, how to trade this for the short term, it's just pretty much scalp trading or swing failure patterns of some sort. It's very similar to Bitcoin. We have liquidity here. So if price can get up to there and then we get a rejection, that'll be our entry. If we get a swing failure pattern, that'll be entry, and we'll look for that. Like I said, the correction might get that type of scenario, and like I said, either further down and then back up. We just might play that type of game. We've got liquidity there and we've got liquidity here. If it goes above really high, then you might use this as support to go for this liquidity spot. And really comes down to what Bitcoin, how long will Bitcoin give us a chance for Link to go. But that's what I'm looking at the moment. So I'll leave it at that, guys. Please give me a like and share. Talk to you soon.